Hi, you've reached Bradley Harman, and you're watching Real Estate with Bradley Harman. Today we're going to talk about credit scores and why it's relevant to your future. So let's start off with what a credit score is. A credit score is a three-digit number. It's a three-digit number that represents your financial reliability to lenders and banking institutions and so on and so forth. But in essence, it's created through credit bureaus. And it's based on statistical analysis of your credit files, or in layman terms, it's accumulation of all the data of lending and borrowing money and subsequently your payment of that borrowed money, and it calculates your credit worthiness through this three-digit number. The system of credit reports scores in Canada is very similar to the United States. The two major agencies are Equifax and TransUnion. In Canada, as opposed to the United States, we're allowed to check our credit report free at any point in time throughout the year, as many times as we want in the year. This is different from the United States, where you can check it for free once, but every other time it costs you. You can do it once a year in the United States. In Canada, you can do it as many times as you want. The only thing that you can't do is get your credit report score for free. The credit report itself is free. But it's lame because the credit score is really what everyone's looking at. The credit report is important so that you can improve your credit score, which is why they make it free in the first place. So they want you to be able to improve your credit. This is something the government did for us. The other important thing to note, when you are requesting your report, which I'll get into later and I'll put at the end of the video as to how you can do this and get it for free. The request by consumers cannot be used in a way where it will dock points from your score itself. So it can't in any way affect your credit report. It may show on it that you requested it, but it won't affect your credit score. Lastly, credit scores typically are anywhere from 300 to 900. I call them they're called a beacon score through Equifax. Okay, for instance, the highest score I've ever seen, and I've done mortgages and I've been in real estate for nearly 3 years now. Highest score I've ever seen was 850. Lowest score I've ever seen was 405, and that was like no way in chance in hell this person's getting lent any money. We'll get into that later as well. So why is credit so important? Credit's really important because, as I said before, it is your financial resume. It's used from everything from credit cards, car loans, landlords, employers, lenders, utility deposits, car, homeowner insurance, and mortgages. There's many more. It can be requested by almost anyone, but it's not mandatory in a lot of cases. But typically they are. You're not going to get far if you're going to keep telling people you're not going to give them your credit score when it comes to you wanting something from them. It represents your reliability. As I said, it's your modern day resume of your personal financial life. Good credit can make or break you. I think this is obvious, as it affects everything from mortgages, car loans, student loans, and so on and so forth. If you want to borrow money, they're going to ask you what your credit score is. They're going to ask for the report as well. On the other hand, bad credit will make it more difficult for you to get credit card or credit as a whole. It'll affect your ability to get lower interest rates. And it'll make everything more expensive when it comes to borrowing money for any purpose. It doesn't matter whether your score rates are low due to no fault of your own. For instance, the death of the family, illness, loss of your job, divorce. If you don't pay your bills yourself, that's your problem. It's still going to affect your credit report. Having a credit score that is low will adversely affect every aspect of your life for as long as you have a low credit score. So this is why I'm going to segue into my next topic. How can you maintain or fix your credit score? So I've got a few points here that I've gone over with mortgage agents as well as people from the credit bureau, and pulled it from a few websites. But okay, to start off, get a credit card if you don't already have one. Credit cards are amazing tools, both for your everyday purchases as well as building credit. Credit cards are, in essence, I don't know how to explain this. It's like having a driver's license and not getting into an accident or not getting speeding tickets. Then when people look at your driver's abstract and you've had your driver's license and a vehicle for 5 years and you haven't had any of those, that's similar to what a credit card is when it comes to judging you with a credit card. You use your driver's license, you drive regularly, you pay for insurance, and you don't get into accidents. You don't get speeding tickets. That would be considered a very reliable driver. Similar with credit card. You use the credit card, you buy with credit card, you pay off your credit card on a regular basis, and you don't get into accidents, you don't miss payments, you don't over withdraw or max your credit card out. These are all aspects as to how they're going to judge you, and how your score in the end is going to be tallied up. Obviously, don't fall for the myth that you have to carry balance to get good credit score. It's really just a check to your reliability. If you think about it the way I just explained it, use it wisely. Pay off your balance regularly. They just want to see that you can pay your bills. They just want to see that if you're lent money, you can pay that money back on a regular and timely basis. If you can't pay it, don't use it. But really, when you become an adult, you realize that this is a very simple process. Don't spend money you don't have. Don't use a credit card unless if you don't have the money in the bank. And if you do use the credit card when you don't have the money in the bank, be very cautious with how you use that money. Like I said, a credit card is probably one of the best financial tools you'll ever have accessible to you, because it's money and you don't need to go through any extenuous process to get lent that money. For instance, like lines of credit through the bank, they'll lend it to you regardless of all the different descriptions. There's no race, no religion, there's no cultural barriers. You don't need a business plan. You don't need a large income to get a credit card. You just need to be showing that you're reliable. And that's why credit cards are awesome. You can buy things without transaction costs. You can get points that can eventually get you a trip to Aruba. But this is all with you handling your credit cards responsibly. So that's part of it. Anyways, so let's move on. How else can we maintain or fix your credit score? Add an installment loan to the mix. So for instance, the two major parts of building your credit or creating credit are having revolving and installment versions. So revolving credit is, biggest examples is credit card. So it's something where you can borrow money, pay money, borrow money, pay money. It keeps revolving. It goes back and forth, back and forth. Installment credits are a big loan, like a line of credit, purchase of a car, house, mortgage, all these things. Those are installments. So you have a large sum and you pay it off gradually, right? So having both those two different segments, revolving credit and installment credit, paying those off, they're the biggest ways you can build credit. They're the biggest ways that you can prove that you're financially responsible enough to pay those things down. It's part of our culture, this huge debt thing, but if you look into it, it's also a huge tool, which is the way I like to see it. So don't be scared of credit cards. Just, you got to start thinking realistic. Don't spend money you don't have. Use your way I use it is I make sure that any money that I spend on my credit card, I've already got my bank account. That way, I always know that at the end of the month, I'll be able to pay my credit card off. Biggest way to help yourself avoid major problems. But this is by far the fastest way to improve your credit score. If you don't already have an installment loan on your credit report, so that's, like I said, something that's a large sum of money. It doesn't need to be that large. By large, I mean it's more than a credit card. It could be $1,000. You borrowed money on a line of credit to buy a bike or to buy something, a TV, who knows. But you're paying this off on a gradual basis. This is not a credit card, by the way. If you get something like that, you can get them from the banks. You'll want the loan to be reported to all three, in this case 2 credit bureaus, because obviously you want this to help you build credit. Whether or not you should do this if you don't need to, that's not part of this conversation. Like I said, if you're confused or you have questions on this, please by all means give me a shout or a call, and I will answer your questions, and I'll let you know on a case-by-case basis what's best for you. Pay down your credit cards. Fairly obvious. Paying off all your revolving debt and your installments on a regular basis will help improve your credit, because it proves that you're being reliable, proves that you're working towards paying off the debt. Doing this can help improve your scores, but typically it's not dramatic. It's not as dramatically as paying down or paying completely off your credit cards, especially revolving accounts. If you have a balance and it's consistently high, especially in proportion to your credit card limit, which I'll get into, this, it's not going to help that much. But it always helps paying down your debt. Lenders want to see big gap between the amount of credit you can borrow and the amount of credit that's actually borrowed. So typically, by the end of the month, you want to reduce, if you are leaving a balance on the account, you want to reduce it from, say, 80% of your max. So if you can borrow 1,000, don't be borrowing 100, be borrowing 200. Pay that debt off completely, or keep the balances very low, because that shows that you're not maxing them out in order to accomplish your goals every single month. Or increase your credit limit if that is the case, but try to be responsible with that as well. Typically, obviously under 10% is ideal. Ideal is not having any balance, but a lot of people will recommend paying off the highest rate card first. So if you have multiple credit cards, say you have one at 27%, one at 30%, and one at 10%, they always say pay off your highest credit card. Makes complete sense economically. Don't disagree with them. But in terms of reducing your credit score, making sure that one of the credit cards is not maxed out is almost as important as paying down the high interest credit cards. The credit reporting system doesn't really matter to them whether you're paying a high interest rate on one credit card or not. They just care that you're not at the max or close to the max limits. Racking up big balances can hurt your scores. It's kind of what I was just getting across. Don't max out each and every other month. Like I said, try to keep your balances underneath 30%. This will help. Another interesting piece of information: if you're having trouble keeping track, you can actually set up email or text alerts or messages through credit card companies to allow you to know when your max is past a certain set limit. So if you're saying, I want to keep my credit limit, or sorry, if you can borrow $1,000 on a credit card, and you want your credit card company to let you know when you've hit over $300 on your limit, it's kind of unrealistic. So say you can borrow $10,000, and you want the credit card company to make sure that you know when you hit $3,000. You get a text message on your phone saying you've already hit $3,000 this month. Do you want to pay your debt down? This is a good indicator for when you are spending a lot of money on your credit card, and that you want to make sure that you're paying that stuff down. Just an idea. I don't use it personally because I check my credit card information regularly, but it's something you should look into. If you regularly use more than half your limit on a card, consider using other cards to ease the load. This goes back to the 30%, 10% rule. Next point, check your limits. Your scores might be artificially depressed if your lender is showing a lower limit than you actually have. So this discrepancy, this is something you'll hear a lot of the times. There's a lot of people who say this is on purpose, and the way they do the algorithm to calculate your credit score is skewed in a way to ensure that the majority of people have poor credit. I'm not going to get into that, but I think they might have a point. Most credit card issuers will quickly update this information if you ask. So if there's misinformation on your credit reports, make sure you ask. Make sure you be that squeaky wheel in order so that your problems will be resolved. If your issuer makes it a policy not to report consumer limits, which can sometimes be the case, this can be a problem to you, because if they don't report your credit limit, they may use the highest balance you've had as your credit limit. So even though your credit limit might be $5,000, the most you've ever spent on the credit card was $2,500. But because that particular credit card company doesn't report your limits, the credit bureau will assume that the $2,500 is your top, your max. If they assume that, then when you think, oh, I'm only at 50% capacity with my credit limit, in reality, they could be thinking you're at 100%. They could think you're maxed out every month or every other month, as long as you have that balance. And that makes you look really bad. So you have to call and make sure that either the reporting company, or sorry, the bureau knows, or the credit card company who's reporting it is going to change that and report it subsequently to the bureau. Some people say that you can, do a spending spree, and then if your credit limit is $5,000, you spend $5,000 one month so that the credit bureau knows, okay, so their limit's $5,000 as their benchmark. You don't need to do that. You can make a few calls and you can do it the other way. It's a pain in the ass to call them. I've done it a couple times, but it works if you're persistent. If you have, for instance, if you have a credit card, say a Visa, the kind that must be paid in full every month, so it's like a charge card, rather than the kind which can carry a balance. You probably don't have to worry, because charge cards typically aren't included in the credit utilization portion. So in essence, if the card is categorized on your credit reports not as a charge card but as a revolving credit card, and either a credit limit or a high balance is reported to the bureaus, your balance on the card could be a problem. So for instance, if like I was saying before, you have revolving and installment forms of borrowing. If you have an installment portion, so for instance it could be a line of credit of $5,000 as an example, and you're paying it off in installments, so this is a good form of improving your credit score. But if they don't report it as an installment portion of on your credit bureau, and they assume that it's in a revolving portion, you may have borrowed $5,000 here and you're only paying $200 a month slowly over time to pay that debt off. Could be a car loan, but they assume it's a revolving form of credit. The revolving form of credit will then be a big issue, because now they're saying, oh, he's got $5,000, he's maxed out his credit card and he's only paying $200 a month, so that means he's carrying a balance over time. That will negatively affect your credit, plain and simple. You have to get that resolved. This is why you check your credit report regularly. Dust off an old card. So for instance, the older your card, the better, because it shows a longer history of you being able to access credit. Don't get rid of the oldest card rather than the newest card. So if you just got a new credit card and say the new one's got a higher limit than the old one, don't exchange the old one for the new one unless there's some significant financial benefit through this new card, or they're giving you some type of special deal. For instance, I did that with my MasterCard. I got 2 cents off each liter at one of Petro Canada. That's one of the reasons I changed my MasterCard. But other than that, I had been with MasterCard since I was at Brock, and same thing with my Visa. Was actually before Brock, so no, it was at Brock actually. Anyways, if you stop using your older cards, the issuers may decide to close the accounts or stop updating them to your credit bureau. This will affect your credit because the credit bureau wants to see the older documents, the older reporting, so they can go back further in history to check, see how reliable you are. Alright, so goodwill. This is something I've done. For instance, if you have missed a payment at some point in time, but you are making regular payments to a company, Rogers, a cell phone company, insurance, mortgage, this, that, the other thing, you can sometimes ask out of goodwill for them to erase that portion of your credit history from the credit bureau. So in most cases, they don't really have a choice. Like anybody who you're paying on a monthly basis, if you don't make payments, they report that to the credit bureau. They don't really have a choice in a lot of ways. But if you call and you're a good customer, sometimes they can alter that information, or they can try to repeal it. So if it was a few years back and you say, listen, get rid of that blemish, they look at you, they see you're a regular customer, you pay regularly, and it was just one of those odd situations, they will remove it. Sometimes they'll give you one freebie. So if you maintain the good customer status, sometimes they will extend, a little bit of goodwill and erase those poorly things. The other thing is if it's an aged issue, so for instance, if it's like 4 years ago, sometimes they'll just erase those delinquencies, so long as you've been consistent with your payments. Dispute old issues. So old issues could be fraud, could be, like I said, other non-paid moments where you blank out and you don't pay the bill. Try disputing all these different issues, because sometimes the bureaus, they're confused, they don't really know, or it's an old account, or the company got bought out by another company, so they don't actually have the reporting issue where it shows that you didn't make the payment. If you call in and say, listen, that wasn't me, you're lying, but sometimes it works. I've had clients do that, and they'll be like, yeah, well, we can't really check it, so let's just erase it. And sometimes that works in my customers' favors. Another customer, just like I said, disputed a company that actually merged. I think it was a furniture company or something. They sold the furniture company, and they had financed stuff through them and defaulted on the payments. Merged with this other company who bought that one out, but in the onsu of buying and all the moving around, they lost these documents. So when this client called them, said, I didn't ever make a late payment or this and that, they were actually forced to take it off the credit bureau. So sometimes that works in your favor as well. Significant, so yeah, make sure you react quickly to any potential errors that happen to your credit report, so you can catch them in the bud before they become larger issues. Your credit score is calculated based on the information in those reports. So certain errors that are made can really affect that credit report, especially if you've got a higher score. A minor issue can affect it by like 50 points. But if for instance, I had 745 and an issue came up with one of my older credit cards that I didn't even know was still on, before I could get the issue resolved, it knocked my credit score down by 50 points, which is a huge thing, because it brings you down from like 745 to under 6, or sorry, under 7, so 6, and that can mean the difference between 0.5% on a mortgage. Here's the stuff that's usually worth the effort of correcting within the bureau. So trying to correcting problems quickly. So late payments, charge-offs, collections, or other negative items that aren't yours. Credit limits reported as lower than they actually are. Accounts listed as settled, paid, derogatory, paid, charge-off, or anything other than current or paid as agreed if you paid on time and in full. So make sure those things are all stated as they were, because those will help. Accounts that are still listed as unpaid that were included in a bankruptcy. So make sure any account that was paid off is listed as paid. You don't want the credit bureau thinking that you're still not paying that issue and you're just letting it slide. Negative items older than 7 years, 10 years in the case of a bankruptcy, that should have automatically fallen off your report. So make sure those things are off. Some of the stuff that you typically shouldn't worry about can include various misspellings of your name, outdated or incorrect address information, and old employer listed as current. Most inquiries with respect to, that it pretty much just people just checking your credit score. This could be if you're getting a new credit card, if you're getting a car, if you're buying a house, or if you're checking your consumer report by yourself. Those will all show up. They don't necessarily affect you unless it's a credit report, unless it's a lender and you're asking consistent lenders for the same subject. Those can negatively affect your credit report. So this is something you'll hear about buying houses. Going to a bunch of different banks isn't necessarily the right way to go, because by the time you hit your third or fourth bank, you're starting to lose 5 to 10 to 15 points every time you go to see a new lender, because it doesn't look, it looks bad. It looks like you could be getting declined at each bank, and that's why they're thinking, okay, well, why? Anyways, it's just one of the things you don't do. This is one of the reasons I recommend mortgage agents, because you get your credit checked once and they can refer to 20, 40, 60 different lenders without checking your credit a second time. 2 more items you don't need to correct: accounts you closed listed as being open, accounts you closed that don't say closed by consumer. I don't necessarily agree with them. I wouldn't want an account open or an account listed as open when it's actually closed. I'd rather being accurate. Closing an account can't help your scores and may hurt them. So this is one of the reasons why they say don't get stressed out about it. If your goal is boosting your scores, leave these alone. Once an account has been closed, though, it doesn't matter to the scoring formulas who did it, you or the lender. If you messed up the account, it will be obvious from the late payments and other derogatory information included in the file. So the files will stay on there for a very long time. 4 common credit mistakes. Asking a creditor to lower your credit limits. That's not smart. You want higher credit limits so that you're never really at that high limit. So you can make sure that you're within the 10 to 30% credit usage ratio. Making a late payment. Make sure you avoid making late payments or missing payments altogether. This will hurt your credit score. Consolidating your accounts. Sometimes, as I said, it's better to pay off so that your limit ratio is lower for each individual account. It may not work economically depending on the situation, but these are things to think about. Applying for new credit if you already have plenty. Don't get a 4th credit card. Don't get a 5th or a 6th. Don't start getting credit cards at Sears and different furniture and appliances and this and that and the other thing. Stick with 2 or 3. That's it. You don't need more credit cards than that. All these suggestions work ideally when you have lower credit. If you have higher credit and you start adjusting things, it may actually hurt you. But as I said, don't start adjusting things at all unless you're talking to myself or a registered or a professional mortgage agent or bank or someone who knows what they're talking about with regards to credit scores, because it may seem like an obvious fix, but sometimes it's not. If your scores are excellent, anything of 700 or up, usually 750 is amazing, and to 850, very hard to come across. I've come across one person. You don't need to worry about trying to squeak out an extra few points. Your credit's good enough. Don't waste your time, and don't risk screwing up your credit because you're trying to tweak it to make it look perfect. You don't need 800 beacon score to get the mortgage. See Equifax.ca to get a report for free by mailing them or through fax. Their phone number is 5. Oh wait, no, that's the fax number. Sorry. I'm just gonna post the phone number. I'm gonna post the phone number on this link shortly. But the fax number is 514-355-8502. I'll also post that. If you do have any questions or if you want the actual score outright, you can pay online at Equifax.ca, $15, and you can get not only your report but also your credit score. This is something I recommend to everyone. It allows you to get a bearing as to where you are right now and how you can improve. Once you have your report, before you try to analyze what you can do to repair it or prune your score to make it better, make sure you either contact me or a qualified mortgage agent, as I said, because not all of the things I say work universally, and you can run the risk of making the situation worse rather than better. If you would like an estimate of your score, have questions on how to repair or repair your credit, don't hesitate to give me a call. Like I said, you can always email me at bradley.harman@century21.ca or call me at my office, 905-450-8300. But overall, this was pretty much the credit report YouTube video. If you have any other questions, give me a shout. I really hope you enjoyed it. Thanks for watching, and as usual, if you have friends or family, I'm never too business for your referrals. Have a good day.